Good morning, everyone. Breaking news today, the Bank of Canada, they've just announced a significant 50 basis points rate cut, bringing the interest rates down to 3.25%. This is the fifth time since June that the Bank of Canada has cut interest rates. And across various social media platforms, there's been a lot of comments. So let's break down what this means for investors, traders, lenders, and borrowers, in case you are wondering what this means for you. Now, for borrowers, this is a welcome news, particularly those that are on variable interest rates, because now with the rates at 3.25%, variable rate holders can expect an immediate relief. According to the Bank of Canada, this translates to roughly $30 less monthly payment for a mortgage of 100,000. So that's a relief, for mortgage debt based on a 25-year uh, amortization. Now, these are significant savings because if you look at the long term, having more money in your pocket, in my case, is something that I welcome. Now, for fixed rate mortgage holders, they may not be directly impacted, but they may see lower rates when they renew, due to the falling bond yields. Now, moving on to the impact on investors. Investors may be recalibrating their portfolios with lower rates. Bonds become more attractive due to their higher relative interest rates. Now, this also means less income for those that are invested in fixed interest investments. The Bank of Canada projects that this move will potentially stimulate the economic activity because Canadian economy has been struggling in some sectors. For example, unemployment rate has been reported to be 6.8% according to Statistics Canada. So this is a very high unemployment rate, especially if you compare this rate with other developed countries like the United States and other countries in the Eurozone. Now, for traders may be eyeing the exchange rate volatility between the Canadian dollar and other currencies pairs, right? So for those that understand how the forex market works, usually when there are things like this, economic news like this, right? This cut, in my view, it signals economic concern because um, this might pressure the loan further, in other words, for it to depreciate. So you see that some comments I've seen on social media platforms like X and other financial news outlets, they are possibly projecting that the US Canadian exchange rate, the market might still digest this information, but the Canadian dollar might fall further. But that means if someone is betting or has been betting that the Canadian dollar is going to depreciate, right, versus the US dollar, they are going to make more money. So in the markets, what happens is that if you have someone who is betting for the opposite move, whichever move, the other person makes money whilst the other person potentially loses money. So in this case, the Bank of Canada, in their statement, they emphasized that they will still reevaluate further rate cuts reduction on a decision by decision basis. In other words, depending on the data that comes in through from unemployment, economic growth, and all other sectors. So as a trader, it is very, very important to remain alert and keep an eye on what's going on around, the economy in terms of the macro economy. Now, for lenders and financial institutions, lenders, particularly banks, we will likely adjust their prime rates downwards, affecting loans like home equity lines of credit, right? HELOCs, and personal lines of credit. So that's a huge relief. According to the recent data by the Mortgage Professionals Canada, with an average of home loan equity line of credit balance, usually people have an average of like 37,500. So if the interest rate, like in this case, has been lowered by 50 basis points, right? Like I said, for every $100,000 of loan, right, it means there's been a $30 equivalent cut in that. So that means that's a relief. So if someone had 37,500, which is the average according to the Mortgage Professionals of Canada, it means this person is going to have an $18 saving per month. So this cut is good. I think there's skepticism around it because what happens with the economy, there are a lot of other variables that come into play. So now, today's rate cut for me, the way that I look at it by the Bank of Canada, it's a clear signal of the economic strategy to try to tackle the slowing growth and rising unemployment. Remember, I said Statistics Canada reported that its average of 6.8%. That's high compared to other countries. So while this may offer immediate benefits for borrowers, the long-term effects of the economy, when I look at things like the economy as a whole, inflation, the currency strength, it remains a hot topic. There's a lot of unknowns in this case. So as an investor, as a trader, or even as a homeowner, I would like to keep an eye on further news to see what's going to happen in the future. But in conclusion, if you haven't subscribed to this channel, make sure you subscribe to my newsletter on www.streetwiseeconomics.com and also subscribe to this YouTube channel so that you can get more insights on macroeconomy, on finance, on what's happening in the market pretty much. I release this newsletter weekly every Friday. So if you go on my website, you will see an option to sign up. Now, thank you so much for tuning in. But like I always like to say, please trade or invest wisely because there are a lot of nuances in the market. Thank you so much and see you in the next video. Thank you and bye-bye for now.